Okay, peeps, welcome back. So today we're going to be going over the YieldMax ETF's underlying stocks and try to find out which ones are the best ones to buy based on price action right now and which ones we should be staying away from. So with that being said, let's get it. All right, so first one we're going to start out here with is Coinbase. This is the base of the coins. So as you guys can see here, this was our previous all-time high at 372. We did not even make it up to that point in this most recent run we had. I don't think it's really Coinbase's fault. I just simply think that the macroeconomics are kind of putting a little fear into the market. So it's not really that uncommon. I mean, it's been happening for decades. So these kinds of things happen. They're normal. It's something that most investors or traders even that have been doing this for a long time eventually get used to and even kind of become numb to and are kind of just like, okay, yeah, whatever. So anyways, initially we thought that this was going to be a rising wedge. It turns out it was, or I should not, my bad. I shouldn't be saying a rising wedge. I should be saying a bull pennant. But turns out it was actually a rising wedge. So rising wedge is bearish. We did get a break out of that. The target, of course, is the bottom of the wedge. So we pretty much hit that almost perfectly. And Coinbase is sitting on support. So one of two things could happen this week. It could either break through or it could bounce. I'm willing to say at this point that it's probably going to bounce. And reason being, if I show you guys over here, all the way up here, you guys can see the NASDAQ stocks above the 50-day moving average, as you guys can see here, is all the way at 17. So it's almost back in that buy zone again. The last time that we saw this was about 6 months ago. I'm actually going to show you guys right here. So basically, whenever this enters the green zone, that's the perfect time to buy in the short to, or I should say immediate, roughly about the immediate to short term, maybe even the midterm, somewhere in there. And when it gets up to this red zone, that's ideally the time to sell and get out. Of course, as you guys can see, the time lag between these two is nearly 4 months, so it's a very long time. But just based on this metric and this metric alone, I would say that Coinbase is likely going to bounce more likely than it's going to sell off. Plus, we've also had the Bitcoin halving. A lot of crypto investors, they already know, where the crypto and the altcoin space is going. Eventually, the Fed's going to cut rates, and when they do, the value of the dollar, the DXY, is going to drop, and that's very bullish for Bitcoin. So all those things are getting ready to take place here pretty soon, I think. But as you guys can see over to the left here, this was major support before. So kind of the synopsis of this is that, and of course the RSI has had a death cross, but that doesn't mean anything because as you guys can see, it's had a few of them back here, but even still went up in price. So I don't think that really matters at this point. So pretty much current support as of right now is between 213 to 226. 307 to 374 is resistance, and the support below that, which is in confluence with the EMAs, is going to be about 152 to 173. The measured move on Coinbase is pretty large, so it's about 46 to 77%. So if Cony, the underlying, does bounce at this point, I would say that it's definitely, it's one that we're going to be picking up based on looking at this. Plus, I can also tell you guys that, Coinbase is the custodian for all of the big spot Bitcoin ETFs. They basically custody everything for them. So a lot of bullish news there. If it does break through, maybe just DCA on the way down. That's something to consider as well. So MSTY, this one is very interesting. We don't really have a lot of resistance up here. As you guys can see, it's literally sitting at all-time highs. It could bounce probably maybe off the top of this candle right here at about 1100. It could go lower. It could go way lower. We really don't know at this point, but it held this trend line and then just took off like a rocket ship on the news of the spot ETFs. So I would say likely this thing is probably just about done pulling back. But just to be on the safe side, if I was going to buy this, I would DCA in because it could go way lower. It could go all the way down to $700 before potentially having a bounce. It could even go all the way down to this trend line at currently roughly around 420. Funny enough, we keep seeing this in crypto. So, it could go lower, but do I think it's going to go that low? No. I think it probably bounces right around the $700 level at the lowest point. maybe just a DCA in would be an ideal way to go about it. So that's MSTR. Now this is Apple for Appley. As you guys can see, we do have a confirmed lower close below these candles. So where's the likelihood of the next bounce? I would say probably somewhere around these candle wick tops here. So maybe 155 to 155, 158, somewhere in there is likely where this thing is going to bounce. I mean, it could bounce immediately right where it's at because of this low right here, but is that likely? No, I would say probably not, because again, this is a candle body. This is only a wick. So again, roughly around 155 bucks. If you're looking to buy into Appley, maybe a DCA down is, an ideal strategy. Maybe DCA just a little bit up here and then maybe kind of get more aggressive as it goes down. Again, what you guys want to do with that, that's up to you. So 117 to 127 is support, resistance 172 to about 182. And then the all-time highs here where we had the double top is about 193 to 200 bucks. So AMZY, once again, this turned out to not be a bull pennant. It was actually a rising wedge. So we did have a drop out of that. The target for the rising wedge is about 161. So pretty much about the bottom of that wedge. So yeah, as of right now, I would say this upper bound right here is probably likely going to stay as resistance. So we could see a drop down to somewhere between 137 to 150 at that support. And then the current resistance is 170 to about 190 bucks. Now for a more immediate target, I would say likely it's probably going to bounce somewhere around this wick. So maybe 170. Again, that's a little bit higher than the wedge, but it is basically the bottom of this resistance. So this thing, if it comes down to support, could drop as low as 14 to about 21%. Do I think Amazon's going to do that? No. I mean, Amazon's a huge company. They deliver to everybody all across the world, anywhere. I mean, you could, order anything, essentially anything on Amazon and just have it delivered straight to your door. So I don't really see the likelihood of a major sell-off here. Again, this could be a double or even a triple top up here, but we just don't know yet. I think probably at the lowest point, this thing gets down to maybe 150 and then bounces. Again, you have this trend line here, so maybe at the absolute lowest point, it gets to 140, but I think even that would be unlikely at this point. So this one, I still think it's a little overvalued. I would stay away from it. That's just my opinion. So Google, interestingly enough, this one is actually going up. It's at new all-time highs, believe it or not. So we had the gap up, break of the trend line, and then it just pushed up. As of right now, I would say this is actually going to hold a support. So I know GUI is relatively cheap because we do actually have some GUI. But based on this trend, based on the way this thing is going, I would say likely this thing is probably still going to keep going higher. So is it expensive? Yes. But in terms of the price appreciation, I mean, it could just keep going up in price. That's a possibility. I would say I'm kind of maybe neutral on this one. So support's between 145 to 152. I mean, the pullback from 160 is not really going to be that much. So we have some. We're not really going to buy anymore right now unless we see a bigger dip. Probably just kind of going to let it ride out and see what it does. So Disney, this is for the DSO. So we were supposed to have some kind of pennant pattern breakout here, bull flag breakout. That did not happen. I mean, it did to some extent, but not to the target. So regardless, it does look like this previous support here is still holding as resistance. We had kind of a fake out here. So support below that is 78 to about 88 bucks. And then 112 to 120 is the current resistance. I would say, unless this thing turns into support, I would say this is a little expensive. Maybe I would not be buying DSO up here if it was me. That's just my opinion, of course. And kind of the basis behind why I'm looking at it this way is because we bought some Cony when Coinbase was down, but then we had no idea it was going to go up to 30 bucks. So if we end up seeing a major reversal, or let's say the Fed comes out and cuts rates and all of the tech stocks, all of the dividend paying stocks, all of anything in the market starts moonshotting, then, you could see something like this. So, I mean, if it was going to moonshot from this point, ideally it would just go straight up. But what I'm trying to get at here is maybe it's a good idea to hedge. So if it's too expensive, maybe just don't buy it, wait for it to come down, DCA in. Of course, what you guys want to do is your choice. Just presenting the opportunities here. So to get back down to the support, which in my opinion, I think it's likely not going to happen, but it'd be about a 22 to about a 30% drop. So Meta, yeah, that's supposed to be a bull flag, but clearly it did not. At least it doesn't look like it played out. So this one is really expensive. I would not touch this thing with a 10-foot pole in terms of buying FBY. That's just my opinion. So current support is roughly about 347 to 389. Just so you all know, understand the risk here, the drop would be about 19 to 27%. I can actually show you guys a position that we just got in recently that we accidentally kind of fumbled a little bit on. That was CLSK. We made a put right up here. Kind of got the price got slammed down. We were forced to accept the shares, but we kind of did at the money instead of lower out of the money, and that kind of came back to bite us a little bit. And fortunately now CLSK is starting to bounce, but that's pretty much what I'm trying to point out to you guys is if you buy any of these at their resistance levels, do understand that it could come back to bite you in the what if that does happen. Not saying it's going to, but just understand that risk. So MSFT, I'd be looking for a pullback into this trend line. It's respected this trend line basically since the start of last year, so it's a very strong trend. That's going to be roughly about $380, and you guys can see the top up here at about 430. So from the top to the trend line, you're looking at about 12%, and from the current price to the trend line, you're looking at about 5%. I would say maybe DCA down. That might be a good idea. Of course, it's up to you guys how you want to do it. So Netflix, this one, I believe this one actually just had earnings, if I'm not mistaken. Yes, they did. So it looks like they have had a beat on earnings, but of course, you guys know we had that current macroeconomic event between Israel and Iran, and that kind of really spooked the market a lot, and they did not like it. So a lot of stuff really sold off pretty hard. So I would say likely, if this thing is going to bounce, it's going to bounce somewhere around this support and or this trend line. You can see they're kind of lining up almost exactly with each other. So I would say maybe somewhere between 425 to, let's say in a few weeks from now, maybe 425 to 445 is where it bottoms out. So that move could be as much as 23%, as little as 20%. So again, the support below that is 385 to 410. Resistance 560 to about 695, $700, somewhere in there. Netflix is a little expensive. I'd be kind of waiting for a little bit more of a dip on this one. So NVDY, same thing. In terms of NVIDIA, I mean, it's a little difficult to tell how far this could pull back. I mean, we've seen this thing just do this monster move, and now there's a pullback. Of course, there's a pullback. There's always going to be a pullback no matter what you invest into in the markets. That's just the way trading goes. Told you guys this for eons. The markets moves in waves, okay, up and down. So about 34 to 38% to get back down to that support, and that support is 460 to about $500. And the top up here is just shy of 1,000. So I don't necessarily know that it's going to go all the way down to that support level. I mean, if we take a look at the smaller time frames, there is kind of a gap here. So maybe it stops in between this gap. I don't know if you can see it or not, but there's a gap here. So maybe it gets stopped and filled somewhere between 690 to 740, and then it bounces. That could be a potential bottom. But because it's so overextended from the support and the trend line and the EMAs, I would say maybe just at the absolute riskiest, maybe DCAing down might not be bad. So Tesla, we talked about this one before. Tesla currently has bullish divergence. RSI is moving up. If I can actually, this is a little difficult to see. Hold on, let me go over to the daily time frame here. So here we go. Okay, so you can see it on the daily time frame. RSI is moving up. We just got basically oversold here, but the price is moving down. Generally speaking, that is a bullish reversal sign. That means basically what this is telling us is that there's a chance not too far off in the future that we could have a move up. Plus, you also have earnings right around the corner. That's something to keep in mind. And I also want to point out one more thing on Tesla. We have this massive multi-year trend line here. At the absolute lowest, this thing could hit maybe 134 before bouncing. I don't think it's going to go lower than that, if I'm being completely honest. Again, because this thing is so massively oversold, it's not even funny. But at this point, I would say that, Tesla and Tesla are looking pretty cheap. Do whatever you want to with that. So support is between 150 to 170. And the next, I actually did not mean to get rid of that. Whoops. So hold on a sec. Give me a second, guys. So yeah, basically the next resistance zone is going to be about 203 to 218. If we do see a bounce anywhere in the zone, let's just say maybe right here at 140, it's going to be a pretty large pop. So it's going to be about 43 to 52% to the upside. So pretty cheap on Tesla. I would say Square is pretty cheap. So this thing, as you guys can see, is massively undervalued compared to the highs. So you're looking at about a 4x just to get back to bull market highs. So the current support is between $41 to about $55. Current resistance is 83 to about 91. If we do the measured move from where we are currently down to this basing structure here, it's about 20 to 40-ish%. So it could be a nice drop, but again, it doesn't have to sell off. There's no guarantees. So it does look like Square does actually want to pop out of this channel here and maybe go higher. So I would say at this point, maybe just DCA as a hedge, not necessarily waiting for the bottom, but not necessarily looking to buy everything at the top either. ExxonMobil, this one's expensive. I would not touch this with a 10-foot pole, so it's sitting at the all-time highs. This is about 115 to 121. On resistance and support is $96 to $83. I mean, again, with the chance of there being some kind of major global conflict, the price of oil could go higher. That's a possibility, but I mean, I don't know, man. Do you really want to risk it from all the way up here to all the way down here? You're talking nearly a 20 to a 30% drop, and we all know that the YieldMax ETFs will probably fall more than that. I would not even buy a single share of this at this point. That's just my opinion, of course. So JP Morgan, 166 to about 174. Peak up here is at 200. I mean, maybe DCA from here down might not be a bad strategy. So from that zone to the top up here, you're looking at about 18%. This is the ARKK fund, or OARK for the YieldMax ETF. So once again, we did see a break of this trend line. We have not seen an actual massive breakout from this yet, but I do want to point out this, once again, bullish looking divergence. So price going up, price going up. Price going up and RSI going down. I'm trying to find the words here to say. So, I mean, as long as it holds this trend line, we're good. We'll just have to wait and see on that one. So support is 28 to 36, resistance 49 to 54. If I was going to buy this, I'd be hedging by DCA in. I would not put a lot in right all at once. I would just do little by little. That's just me. So AMD, this thing took off like a rocket ship and then failed, came back down to earth straight through this support here, or what we thought was going to be support, and is looking to maybe retest this trend line in support. So that's going to be about 126 to 133. The trend line is at about 110. I don't think it's likely to hit the trend line. Resistance 158 to 165, and the all-time high is at 227. So if we measure that to the all-time high, I mean, it's a massive increase, about 56%. Compared to maybe a 13% drop. So the risk reward here is pretty good. I would say that it's more of a buy than it is being overbought at this point. So PayPal, this is based on PYPY. Again, this thing is dirt cheap. I don't really need to say much more than that. You guys can look at the chart and see that for yourself. So current support is $30 to 47. Resistance is 60 to 83. If you want to measure this from current price to support, about 25 to 51% drop. I mean, that would be your like maximum risk on this thing. And I do mean maximum risk. It seems like a lot. It really does. But when you measure it like this, from the bottom to the top, I mean, you're talking about nearly a 400% increase on this stock. So yeah, when the Fed cuts rates and monetary policy becomes much easier, I suspect this thing is going to have a huge run up. So mRNA, this is the Moderna or mRNY for YieldMax. You guys can see the highs up there at $500. Current price at 100. This thing is extremely cheap in my opinion. The risk is very low. Again, based on the chart, I shouldn't need to say much more of anything. You guys can see that it has held support since basically 2020 down at this level. So you're talking nearly 5 years of support here. So that support zone is going to be about $62 to $97 and $180 to $219 to get back up to that resistance. Assuming that it does get back up to resistance, you're looking at about 78 to 116% gain compared to a maximum 37% downside. That is assuming that the support holds up. Obviously, there's no guarantees. So KWeb, still trying to get out of this falling wedge. There's no guarantees it's going to happen, but we'll just have to wait and see on this. So KWeb and Clip, in my opinion, are extremely cheap. This is our bonus chart. As you guys know, we cover this one with the YieldMax ETFs. So the all-time high here for the China Internet covered call, or basically, the China Internet ETF, as you guys can see here, was massive compared to the current price. It's about a 4x. Something I want to point out here is every single time we got down to this green zone, which is more than 10 years of support at this point, we had a huge bounce. Had one here, here, and now we're currently in the support zone right now. And you guys can see that some of the times that we were oversold on the RSI, we were also pretty close to those lows. So we got one here, and then we also have one right here. So pretty strong indication of a potential major reversal on this thing to be going to the upside. Again, I mean, if this thing goes down to the lows, you're looking at about a 29% drop. If it goes back up to the highs, it's going to be pretty big. So 172 to 214%. And then the maximum upside would be about 315% gain. Again, this is kind of a generally slow moving one. Even if we were in a super bull market, maybe a year or two before it gets back up to this zone, I wouldn't count on it being like immediate. But ideally, the best time to start loading the bags is at the cheapest prices. So that's kind of what we're seeing now, but that's just my opinion, of course. So anyways, hope you all enjoyed this content. Please like, comment, and subscribe, and we'll see y'all later. Peace.